So in this segment, we're going to be talking about the global tax deal the G7 agreed to, which may let Amazon off the hook, say experts. And it very much looks like Amazon are being let off by this tax deal, which is unfortunate. There may be some sort of corrections, but it's not looking great. So experts have raised concerns that Amazon may escape paying significantly more taxes in some of its biggest markets unless world leaders close a large loophole in the historic global deal. Finance Minister in London from the G7 group of wealthy nations, including representatives from the UK, Sabi Dishirishi, I'm not sure who would be from the US and the EU, but on Saturday, they agreed a landmark deal aimed at making the biggest companies such as Apple, Microsoft, Google, and Facebook pay more in tax. These are companies which get away with absolute murder when it comes to paying taxes, and that's one of the reasons why they've become the billionaire companies that they are, through absolute immoral tax practices, among other things. So the two pillars of the deal would make companies pay a percentage of their profits in markets where they were making large sales despite a minimal corporate presence, as well as setting an unprecedented minimum global corporation tax, which is great because certain countries have incredibly low corporation tax to invite companies to those countries. I think the Netherlands would be one and Ireland would be another, where they keep the corporation tax lower. I think Cyprus is another one, so that invites corporations into setting up shop within the Republic of sort of within Ireland or within Cyprus, and they'll get some of the tax revenue, but it undercuts other countries which have higher taxes where profits are being made, if that made sense. However, I don't know how to pronounce that word. It's like a communication from the G7 minister said that they envisioned Pillar 1 would only apply on profit exceeding a 10% margin for the largest, most profitable multinational enterprises. So if you make, I think, a margin of around 10% profit, you'll get taxed under this new scheme. But that does have issues when certain big corporations run a low profit kind of business model, such as Amazon. Amazon don't touch anywhere near 10%. They're about 6.3 according to this article. So Amazon, one of the largest businesses in the world with a market value of $1.6 trillion, that's 1.1 trillion pounds, and sales of 386 billion in 2020. A Luxembourg subsidiary paid zero corporation tax in 2020 on sales income from across Europe. So they would set up, that subsidiary within a low tax haven within the EU, for example, and they wouldn't pay much in tax, despite the fact that Amazon have made a ton in profits from around the EU. So zero corporation tax in 2020, sales income of 44 billion euros, 44 billion pounds, making Amazon a prominent target for politicians campaigning for changes to the global tax system, which absolutely Amazon, should be a target for this. But the problem is the way they've gone about it. Amazon's profit margin in 2020 was only 6.3%. It runs this online retail business at very low profit margins because it heavily reinvests it into other parts of Amazon. Not to mention the fact that by cutting prices in certain areas, you kind of stifle competitors as well, because your products are way cheaper because you're not aiming to make a high profit on them. You're just aiming to make a small amount, relatively speaking, but especially since Amazon wants to sell other services as well. Richard Murphy, visiting professor of accounting at the Sheffield University Management School, said the 10% profits threshold was inappropriate because of the different business models for different companies, which makes sense. Some companies aim to make a lot of profit because that pushes up share prices, whilst other companies aren't after that. They might keep a lower profit margin for other reasons. He added current approaches to reporting profits in each country were easily gamed. So again, if they can get around these systems, they will. This deal signed by the G7 countries could easily be optics, because a lot of people want some sort of global tax for big companies because they don't pay enough in tax. This could turn out to be a false hope unless they get the detail right, he said. But what are the right details? What will it take in order for these companies to pay their fair share of taxes like other smaller companies? How do you achieve that? That's the problem. And I don't have answers for that. The G7 aimed to give momentum to the larger talks at the G20 group of nations. Campaigner said they hoped the later negotiations would include an approach known as segmentation, meaning profitable parts of businesses would pay tax in their own right. And it mentions Amazon Web Service, which makes a large profit. And you got to think that if you have a certain kind of part of your business which makes a lot of money, you can use that part to offset losses in other areas. So Amazon can use their the profits made in the web server sort of wing of Amazon in order to offset the say the losses in another part, say the retail side of Amazon. That way they can keep their prices extremely low and not make a massive loss, because that loss is subsidized by the Amazon Web Service, if that makes sense. So based on the communication, Amazon is not captured, said Paul Monaghan. I don't think that's even right. Chief executive of the Fairfax Foundation, which accredits businesses that do not avoid tax. If there's another layer of detail that suggests Amazon will be captured, that's great, but it hasn't emerged yet, because most likely there won't be. There won't be more details on Amazon being captured. Janet Yellen, who has a lot of corporate ties, throughout her life, the US Treasury Secretary, on Saturday told Reuters news agency that she expected Facebook and Amazon to be covered by the proposal, but the thing is, by the looks of things, that's not going to happen. So I don't know what she's talking about, unless she's got some secret info that we are not privy to. It doesn't look like Amazon are going to get caught by this. It will include large profitable firms and those firms I believe will qualify by almost any definition. She said a segmentation approach would mean a company like Amazon would pay tax in countries such as the UK on profits of subsidiaries such as Amazon Web Services, that it's a lucrative web hosting arm. AWS, Amazon Web Services, made a margin of 30% in 2020, according to the Fair Tax Foundation. So that kind of profit margin, instead of paying tax on it, they could use that money to go to other areas, or do whatever with that, so they don't have to pay taxes, and they won't fall foul of this tax rule. So I think segmenting it would be a phenomenal idea, that this wing of the company made X amount of profit, so they should get taxed. But I don't think that's going to happen. Call me pessimistic, or call me wrong. Fair play, but come with some facts, please. Sources said that whilst the G7 sealed an overarching agreement, details about how to carve up the revenues of big corporations into their constituent parts for tax purposes has yet to be agreed. Also, the fact that what areas do they have to pay tax in as well? That's another problem. Who decides how much profits Amazon have made in the UK, or in Germany, or in France, or in Japan, or in the US, for example? How do you define that? It is possible that some businesses will be able to rejig their operations to offset profits against loss-making units to remain under the 10% threshold. It should be for large multinational companies. It should be for any company that's worth, say, over, $100 million. That's how they should have done it. And they should, the tax threshold should be far lower. Alex Cobham, chief executive of Tax Justice Network, so many of these, said if the OECD cannot ensure Amazon is in its scope, not only will it fail to meet the public demand for fairness here, it will also offer a blueprint for other major multinationals to escape this major element of reform. So, say a company's making, say, 11% profit, they could take that money and, throw it, give it to charity, or, give it pay rises to workers, which isn't a bad thing, but they are, if they can get their profit margin down from, say, 11 to 9%, then they're not going to be captured within this tax policy. So it's not great. Work is underway by the OECD under the banner of its lucrative framework to resolve how companies should be taxed ahead of a meeting of the G20. So the OECD have a lot to figure out here, and I don't know if they can do it. It is expected that 135 countries that have signed up to the OECD scheme will benefit from extra tax revenues from large corporations. And I think any kind of country or entity that allows tax evasion should be blacklisted. That includes islands like Guernsey and Jersey that are notorious for tax avoidance, should be blacklisted. They should be blacklisted. They should be not punished, but kind of outcast from, I think, the wider community, because they're the ones that are going to allow these companies to further commit tax avoidance, which is wrong. Companies should pay their fair share of taxes. If a small, as Americans say, mom and pop shop have to pay taxes or whatever, why shouldn't large multinationals have to as well? Facebook, the social network company, on Saturday said it believed it will pay more tax. However, Amazon was unable to say whether it expected to pay more tax. And the thing is, I don't think Amazon have been caught in this because they went with the wrong mechanisms. Whether that's because it was incompetency on the part of the G7, or maybe they couldn't get the agreement that really would have impacted companies like Amazon, or it's just some of these politicians are in the pocket of a company like Amazon, which is massive. Who knows? But it's not looking likely that certain companies will get caught within the net of stopping tax evasion. And the simple fact is the government have given these big multinationals a way out, which is don't have a profit margin of 10% or higher. Keep it lower than that, and you will not fall foul of these taxes by the looks of things. But maybe someone knows something I don't, which is very possible given my lack of knowledge and the viewers' knowledge, which is generally always higher than mine. But anyways, let me know what you think in the comments below. Like, comment, share, subscribe, and hopefully I'll see you in the next one.